All right there, everyone. Great to be back with you. We've got Bob Kudla of Trade Genius Academy visiting with us once again. Bob and I chatted about a month ago, and we got a lot of great feedback from all of you that you really liked our conversation. I remember one comment said something akin to finally an adult conversation around the coronavirus, which was just getting started the last time we chatted about a month ago. So if you're not familiar with Bob, he's the founder and president of Trade Genius Academy. He started Trade Genius back in 2015 after 25 years as an executive for two Fortune 500 companies in the financial services industry. And Bob's strength is he's able to see around the corners and position his trades into the right markets and sectors, which has earned him over the past 5 years a 65% overall win record in the market. So he's going to once again help us make some financial sense of this coronavirus pandemic. And so, Bob, welcome back. It's great to have you here.
Oh, hey, thanks for having me, Dr. Turley.
Let's dive right in. Market Watch has a great piece on the industries that are really getting slammed through this coronavirus shutdown, but it's also taking a look at these sectors that are proving to be somewhat recession-proof. So just to kind of start us off here, can you give us your assessment of where things stand in terms of the industries that are taking a hit and those that are weathering the storm well?
Yeah, so if you take a macro look at the United States economy, we're actually very unique in that we have a high, what's called a consumer component to our GDP, but we also have a higher service component to our GDP. That means people consuming services. And what the coronavirus lockdown has done in terms of creating winners and losers around essential and non-essential services, per the government, is that it exposed a lot of companies around things that were considered what we call consumer staples versus consumer discretionary.
Okay.
And some of those are gonna really have a hard time coming back. And because what happens a lot of times with this, Steve, is that you have trends that are in motion already, like commercial real estate versus Amazon, right, and streaming versus going to the movie theaters, DoorDash versus going to a restaurant. All those trends are gonna accelerate.
Right.
And so and even airline travel versus Zoom, right? So those are the things that I think are going to continue on. I think people are now getting pretty comfortable working from home. Companies have now figured out maybe who can work from home and who can't.
Right.
And also people are like saying, hey, look, I got a Fire Stick. I pay $125 a year, versus, going to the movie theater once and paying $60 for my family to eat bad popcorn with 300 people, So I think you're going to see companies like, DoorDash kind of companies do well. You're going to see commercial real estate is the one that's going to get absolutely rocked. And then other things people are going to find out they actually could live without. And I think, you're talking about tanning booths and going to Starbucks. Starbucks shut down for 5 or 6 weeks. People start, hey, maybe I'll just get a Keurig. I can't I can't believe I was paying $1,000 a year getting coffee at Starbucks every day. So I think you're going to see a lot of that take place, and I think that's where you're going to see a lot of changes. Some things that weren't on there that I think are going to be absolutely fantastic is, manufacturing is coming back to the U.S. So you're going to see probably a lot of AI and robotic assisted manufacturing. Those kind of tech jobs are going to come back, and you're going to see what I call a move from the urban areas back out to the exurbs. And you're also going to see an acceleration of movement out of, like New York, New Jersey, Chicago, down into the Sun Belt. Because if you look at the death rates, what they call south of the vitamin D border, is that it was nothing compared to what happened in the north. So I think people are reflecting on that, and they're going to say, hey, long term, this is probably the place for us to live.
That's fascinating. So you're seeing trends that were going on for several years prior to this getting exacerbated as a result of this pandemic. And just even I'm from the Northeast, and we've been losing population, grew up in Connecticut. We've been losing population now for my 2 decades, I think. You're saying this pandemic is going to only increase that trend, for example.
Yeah, look, I mean, I have a really good friend who moved out to, you're not from California, but Lake Havasu, Arizona, which is on the California-Arizona border. It's probably one of the oldest average populations in the country. In the summertime, a lot of young people come out because they play on the river. But it was like 3 months before they got to like their first coronavirus infection.
Wow.
It's warm. People are outdoors. The virus doesn't like that kind of stuff. I live in Southern California. I was just telling people, I said, look, I live in a town of 60,000 surrounded by a county of 3 million. And we're not even up to 1,000 infections. My city has 13. And we were one of the very first counties to get the disease. So that has a lot to do with sunshine and relative health of people and spreading in terms of the density of people. And then there's what I call the vitamin D line. It basically goes across the country from Baltimore to San Francisco. If you just do a statistical analysis of the infection, hospitalization, ICU, and death rate below and above that line, I think you'd be shocked. You think we live in 2 different worlds.
Wow, that's amazing.
Yeah.
Yeah. What about, you mentioned the manufacturing element here. So obviously with the economic nationalism trends that have been going on for the last few years here in the States with Trump, I think I read that Hasbro have farmed out prior to this, the Hasbro Corporation prior to this pandemic farmed out over 2/3 of its manufacturing to China. We've been going through this whole, sort of global division of labor where economic and finance has been centered in the global north, as it were, and manufacturing and industry has been shipped overseas, as it were, to the global south. It sounds to me like you're saying we could kiss those days goodbye. Manufacturing really is coming back. It almost seems like it's a national security issue at this point.
Yeah, and look, and we're not the only ones. I mean, Japan is basically paying their companies to bring their manufacturing outside of China.
Right.
China's the big loser here. Look, we're going to bring back, Trump is going to use this, and I think he has support. This is not just a Trump-only kind of thing. The progressive, what I would call the idealistic progressive left, the kids, those people never adopted the outsourcing of jobs outside of our country. So now you have kind of 2 polar opposites. You got the populists and the progressives, both, I should say the socialists, both wanting the jobs back in the country. It's a pretty big political movement here. And anything that is essential now is coming back to the U.S. I guarantee you that. And all these people that are sitting in what I call the Starbucks economy is over. The people living in an urban loft, as a barista earning $30,000 a year, right? And trying to squeak out a living in the city. Look, no manufacturers coming into New York City, okay? Now, if they're going to the Northeast, they're going to be in the exurbs, right?
Right.
And so people are going to be leaving the cities, and they're going to be looking for cheaper digs, and they're going to be looking for jobs that actually are going to be there versus, how many restaurants, they say half the restaurants probably won't even come back. They were already that marginal as it is. And so, yeah, so that's going to be an amazing thing. Actually, there's one of the lemonades out of this lemon is that it's going to force jobs back. And look, and as currencies start collapsing around the world, is that people are going to protect their industries. Look, Mexico is already saying, hey, we may not allow the exporting of silver, right? You have Japan, you have India saying, hey, we're not going to export our medicines. They changed that over the weekend, but because of U.S. pressure. But you're going to see more and more of that. Look, Russia stopped exporting wheat out of its Caspian seaports. So that's what's going to happen next. The flat Earth economic society is dead, and now it's going to come back to tribalism again.
Mm-hmm. Fascinating. So we're seeing, you're arguing nothing less than we're actually seeing the emergence of a whole new economy out of this pandemic, a post-pandemic economy that's radically different than pre-pandemic.
Yeah, well, absolutely. And I think what happens is, like I said, and you articulated, is is trends are accelerating. Something that may have taken 2 or 3 years is now happening in 6 weeks because it's
Wow.
forced to happen. And and a lot of these things aren't bad. Some of the things are going to be problematic, but some of these things need it to happen. So basically, it's called rip off the Band-Aid, right? And
Hmm.
so now we just have to see if they're going to throw enough liquidity and stimulus at it to allow people to adjust to the transition.
And where do you? What's your assessment of? We talked about this in our last chat. What I love about economists is they have to know a little bit of everything. They have to just spread that net so wide to try to understand all the different cause and effects. Where are we with this pandemic? Are we getting towards the end?
Yeah, I think my view is pretty clear that I thought they overhyped it, or their first social media virus, and I think people who aren't supportive of Trump thought maybe this would be a way to wound him. So anything that he was for, they were against. But it's certainly proving out the fact that the virus, although viruses are bad, right? And this virus is a little worse. We're getting data now from countries like Sweden that says, hey, our death rate is converging on your death rate. I mean, by percentages, and it's no worse than maybe the 2017, 2018 flu season that we had. And so I think you saw today and yesterday, Austria said we're getting out of this thing. Denmark saying we're getting out of this thing. Spain says we're getting out of this thing. Sweden and Brazil were never in this thing. Texas says we're getting out of this thing. And Arizona and Florida never really fully embraced the lockdown. They did modified lockdowns, and you're going to see them lift those. And once that happens, and Cuomo today, just before we got on, I would have sent you the note. Cuomo today said, hey, a bunch of us Northeast governors think the worst is behind us. So everybody's seeing the writing on the wall. They're like, look, what did Cuomo say? He said, I need 50,000 beds and 50,000 ventilators. I need the Mercy ship, and I need you to build me a hospital. Well, he has all that stuff. He's given away the ventilators. The hospitals are half empty. He never put anybody in that darn ship, and the Javits Center is empty.
Mm.
And so, and then around the country, only half the hospitals were ever filled. And so what that tells me is that they, just like climate change, when an agenda and money starts to flow, that's, you follow the money, you don't follow the science. And thank goodness this time there was enough people challenging these assertions. And, and look at the survey that they did in London when they said 2.5 million people dead, and that's why we locked everything down. They dropped their thing all the way down to 25,000 dead. They're going to be lucky in England if lucky, if they're going to,
Right.
as a turn of a phrase, they may get 20% of that.
Right.
United States, we're at 20,000 death, but they think half of them we're double counting people with other morbidities. And now we went from 250,000 dead to maybe 60,000. And I guarantee you that thing's going to drop in half, because right now in New York City, hardly anybody knew was going into the hospital. So I think it's ending. And now it's phase 2. And how the heck do they do that? Because they really damaged the psyche of a lot of people. There's a lot of hypochondriac out there that will never be the same again.
Mm-hmm. It's true. And the irony too, you and I were talking about this earlier with the stats that have been coming out, is ironically, there were less people dying overall this year. Is that not the case?
Yeah. Yeah. So what happened is that, auto accidents have fallen off a cliff, pardon the pun. And people aren't dying. I have a really good friend who's a doctor, and I said, can you square this circle for me? He said, yeah, Bob, because a lot of people die in the hospital because they die because they're in the hospital, meaning they die of infections.
Right.
So less people, and then a lot of people also die from, surgery and complications from procedures. Well, they've dried up. So all in all, the death rate in this country has fallen. So, for those who are going to excoriate Trump for being slow to this thing, he just has to point up. I said, hey, I probably saved 1% of the population from death from other causes. So, yeah, so that was an ironic thing that nobody ever takes into account, because, in this society, all that matters is the narrative of the day.
Right. The postmodern society. That's right. Right. So how are your trade genius members weathering this storm? What's been some of the strategies that you've been employing of late?
Yeah, so after the first week that first week in February when we had I think it was the fourth week in February we had that really big, everything got sold off.
Yeah.
That the market started picking winners and losers here, and volatility picked up. Well, volatility means that the range of the stock action, the prices had increased. So it fits perfectly into the way we swing trade. And all we did was go from an average trade of being in a week to be in 3 or 4 days, and our results have exploded because we knew where the winners are going to be, and when they started throwing all this liquidity out there, at least the promises of it, gold and silver and the miners just rocketed. And then we had another interesting trade that it seems counterintuitive, but oil prices were falling. But when they fall, there's a trade that happens because a trick in which the future traders play that makes holding oil in oil tankers profitable, but the oil tanker owners can keep raising their lease rates. So we've had some really good trades trading oil tankers. And so these are the kind of nuanced things that we're able to give to our traders. And it just, we're doing better than we normally do, which is usually pretty good. So we're pretty excited, and we think the market will start settling down again. But we think there's probably one more big down leg to come. I think what's going to happen, I should say it this way, we're having a relief rally. I think when Trump starts announcing we're going to start releasing the lockdown stuff, I think we'll have another pulse higher. And then reality is going to set in for 3 or 4 months when people start seeing, oh my gosh, this company's not going to make it, that company's not going to make it. And then we get what's called the long goodbye. I call it the basically you're just sliding down for a couple months, not big moves up or down, until it finds a level in which we can lift off again. And that's primarily because it's going to take a while for the stimulus money to come in. Like my daughter just got her unemployment check and she was laid off 4 weeks ago in California. My wife's business has been shut down since the lockdown, and we're still in the queue for her to keep her employees employed on the PPP, and they're going to run out of money on that. And then some of the other, the $1,200 they offer, that's still not out yet for people. So what's going to happen here, my point is, it's not woe for me, we're fine. And it's the money that people absolutely need to live on is going to be slower than what people think. Mm-hmm. It's going to cause some anxiety until they just wash this thing. And I mean, they're going to throw another $2 or $3 trillion at this, Steve, and it's going to eventually it'll launch the market back higher. It's just that there's going to be a lot of winners and losers inside of that noise.
Right. And that's what you're trying to discern is the winners and losers?
Yeah, and what we do is, I don't sit there and watch the news and try to figure that stuff out, because that's pointless. Usually they're selling you something they're buying, or buying something you're selling. So we have a system, and basically we call it the profit ribbon system, and it just looks at buying pressure and selling pressure that's within a trading channel, and we just take those signals, and they're right way more than they're wrong, and when we're right, we make way more money than we lose. So all we do is just filter for those every day. I sent you 2 charts. Those are charts just of today, Steve. Okay.
Wow. Okay.
We just put those out there. One trade we put on Thursday and one trade we put on this morning, and both of those were 10% winners. And that's what we do every day. We find 1 or 2 or 3 of these to give to our subscribers. And the other thing that we do is we actually teach people how to do this. So you can trade your own stuff. You can be in the chat room, you can listen to what I have to say, but you can do your own filtering. We give you all the capabilities that we personally use. We give you those capabilities as well, as long as you're a subscriber, and you can chase your own trades.
That's amazing. That's so neat. Again, I like that, the whole idea of, give a man a fish and you feed him for a day, but teach him how to fish, you feed him for a lifetime. That's
yeah, and we do it all. I mean, we teach you how to fish. We give you a fishing tackle box, and we give you fish. So
awesome.
We're a fishing store. So
well, you certainly caught the oil. It seems to me that spike in oil is right. That's impressive. That's something very recent. And
Yeah, we caught that move up, we caught that move down, and then we caught the tanker move up that was a result of it coming back down again. So all we do is watch it, and yesterday I put a note out to our just the general public. I said, hey, the oil trade that they've all been the big fanfare, I said the market's telling us that they're going to sell it, and they sold it. And so that, but all day long you heard on Easter Sunday in the news is that major cuts by OPEC. And so people would run in to buy oil and the traders were selling it to you. So those are the kind of things that we just can see without any emotion.
Mm-hmm. Mm-hmm. So what if you could boil down to one piece of advice for someone who may be obviously very, very nervous about getting into the stock market right now? What would be the dip the toe in the water kind of move for them?
Yeah. So, if you haven't traded before, look, there's a bull market always in trading. Okay. So it's different that real estate always goes up because actually you could trade the stock market up and down, or you could trade different sectors. So it's never a bad time to enter the stock market. And since we've already had a really good pullback already, is that some of the froth has come out of the market. So, it's good to learn right now and get into the trade. And in fact, we had our probably biggest month of new subscribers in March and April that we had in a long time.
Wow.
And they're doing well because the market has given us these opportunities. So as long as the market is kind of nervous, it gives us trades like I showed you today. When the market settles down, then you can buy some things that you can stay in for a longer period of time. And then when the market's just not working at all, we have this button called go to cash. You just sit and wait. There's no
Mm-hmm.
reason why you have to be in every trade every day. So those are the kind of things that we do, and we'll teach you how to do it. And we even teach people how to they can day trade in the futures market, what I would call with training wheels on, because there's some programs out there now. If you don't need a lot of money to get into those trades, and we could teach you how to do that successfully. And we're not Lambo people. So we're not saying, hey, you join us, you're going to be a millionaire next Tuesday. This is a process, but we're going to teach you how to win and make money nearly every day in the market.
You are teaching investment. That's the key, the habit of investment.
Good habits of investing.
Good habits of investment. Yeah. And again, just even listening to what you're saying, I was reminded a little bit of Warren Buffett, just when everybody's selling and panicking and the market's going down, he's smiling because all he sees is all these bargains that he's going to be able to snap up, as it were. And then he's also, as I understand it, you'll know much more than I, but he's also, he has no problem, sitting stuff in cash as well. If he thinks it's not time to buy, he doesn't. He doesn't buy just for the sake of buying.
No, I mean, he has hundreds of billions of dollars in cash. And look, he has no problem selling either. He dumped the airlines because he intuitively knows that the airline industry is we probably had a generational high of airline travel. So,
Right.
a lot of the business travel is probably not going to come back anytime soon. And so, yeah, and the difference between Warren Buffett and myself, Warren Buffett makes the market. Like when he decides to buy, the market won't go down anymore. Okay. So
Wow.
we consider ourselves more like seagulls. We let guys like Warren Buffett down there underneath. He's the shark and the marlin bringing the bait fish up, and we just kind of feast off of the moves that he starts to make, and then we hop off. It's called trading the middle 60% of the move. You don't have to catch the bottom, you don't have to stay into the top, but there's plenty of profit in between, and that's what we look for. We look for the guys like Buffett that start turning the market, and then we chase those trades, and then we hop off before that move ends. In this case, these are 2 or 3 days now. That's how fast the market is.
Wow. Well, Bob, you always seem to bring a sense of clarity in the midst of financial confusion. What can people do if they want to learn more about you and about Trade Genius?
Yeah, go to Trade Genius, tradelikeagenius.com or tradegeniusacademy.com. You can reach us by chat, email, you can call us, and we have people working, all day long. And you can take advantage of some of the bundles we put together. If you like to trade cryptos, you like to trade the stock market, like trade the futures market, or you just want to get the training courses, we have different bundles, already 65% off for your clients, your listeners, Steve, and then they're good till Saturday night, midnight. And if you just want to pick and choose what to buy, you can just go ahead and use the promo code April and take advantage of some of the different services that we have to offer. And I'll just leave you with this. Look, there's always opportunity. Just forget the stock market. If your industry now is going to be in turmoil, I would take really good hard looks at where you think the winners are going to be, and position yourself. And don't let a wall stop you. Go over it or go around it.
Right. That's awesome, Bob. Very good. And we'll also have it. Yeah, we'll definitely have a link down below the video that people can click on to get to your website. Thanks, Bob. It's really a pleasure to chat with you. Really, again, you bring clarity to what's often just such mind-numbingly confusing things, especially economically and the like. So very, very appreciated, and would love to have you on again very soon.